Hello, and welcome to AI Market News by LM. All right, let's get right into it. We are diving headfirst into the turbulence that's absolutely rocking the tech world. After this huge, massive run-up, we're suddenly seeing a sea of red, and it has everyone asking the one big question. Is the AI bubble finally starting to pop?
The mood on Wall Street has been, well, let's just say it's been tense. We saw a really significant sell-off in tech, and what's so telling about this whole thing is that even what looked like good news couldn't calm anybody's nerves. That anxiety was just, you could feel it, and it sent these ripples across the entire sector. And wow, does this number illustrate the point? We're looking at the sharp drop in Nvidia's stock, minus 5.46%. Now, here's the crazy part. This happened right after the company posted what, by all accounts, was a blockbuster earnings report and a super strong forecast. So what gives? It just doesn't seem to add up, right? So this leads us straight into what we're calling the Nvidia paradox. Think about it. Here we have a market leader just firing on all cylinders, and yet its stock takes this massive hit. It's wild. And this one event, this single day, has just amplified fears across the entire semiconductor industry and really the broader tech landscape.
And check out this quote from some of the news commentary floating around. It just perfectly captures the market's mindset right now. This sell-off, it wasn't a reaction to bad performance or a weak outlook. Not at all. It was a reaction to pure fear. The fear that this incredible, unbelievable AI rally has created a bubble that's, well, just gotten too big. And all of this builds into the great debate that's raging across trading desks right now. What are we looking at here? Is this a much-needed, totally rational correction in an overheated market? Or is this pullback a golden opportunity, a chance to buy into the AI revolution at a serious discount? So yeah, that's the real question at the heart of this whole thing, isn't it? And let me tell you, the answer is not simple. It's not simple because, as we're about to see, there are two completely different, almost opposite stories playing out in the market at the exact same time. This brings us to a really crucial split in the market. On one side, we've got the institutional investors, the big Wall Street firms. They're starting to get nervous. They're asking the tough questions like, okay, where is the immediate massive payoff from all this AI spending? And they're worried that the legacy software companies, the absolute bedrock of so many portfolios, are about to have their whole business model completely upended. But then, on the other side, we've got the retail investors. And with their classic YOLO spirit, they're looking at these falling prices and thinking one thing, it's a massive sale.
And this chart, wow, it just shows it all. The volume of retail trading in the software and services sector has just skyrocketed to near record levels. So while the big money, the institutions, are selling, individual investors are just rushing in to buy the dip. In fact, get this, cash flow from retail buyers into names like Nvidia actually hit an all-time high on the day of that big drop. It is a truly fascinating standoff.
Okay, so to really understand if this is just a self-contained AI story or if it's something bigger, we need to zoom out. Let's take a look at how this tech anxiety played out across the wider global markets. And yeah, the closing numbers pretty much confirm where all the pain was concentrated. The broader S&P 500, it was down about 0.5%. The Dow, basically flat. But the tech-heavy NASDAQ, that's where the real damage was. It took the biggest hit, falling over 1%. It's crystal clear. This sell-off was a tech-led story through and through. Now, if we look over at the currency markets, things were actually pretty calm. And that's important. It suggests the anxiety we saw in tech hadn't spilled over into a full-blown global panic. The euro held steady against the dollar-yen pair stayed stable. So what does that tell us? It tells us that, for now at least, the market seems to think this is a tech problem, not a global economic one.
Okay, so we've seen what happened, but now let's dig into the why. To really understand the mood of the market, what's driving these decisions, we can turn to a really powerful tool that actually tries to quantify emotion. And that tool is the Fear and Greed Index. It's a pretty cool concept, right? It's designed to measure the two primary emotions that drive pretty much all investor behavior: fear and greed. It takes 7 different market indicators. We'll look at those in a second, and it blends them all into a single score. A low score means fear is in the driver's seat, pushing prices down. A high score, that means greed is taking over. So here are the 7 components that make up the index. We don't need to go through all of them, but let's just highlight a couple. First, it tracks market volatility. That's the VIX, which, as we know, tends to spike when investors get fearful. It also looks at something called safe haven demand. When that's high, it basically means money is flowing out of risky stocks and into safer things, like government bonds. So by combining all these different signals, the index gives us a really powerful read on the overall psychology of the market. All right, so with all this context, this battle between fear and opportunity, what should we be watching for next? Well, let's turn to the economic calendar and see what data could be coming down the pipe to drive the market's next big move. Okay, so based on the schedule from investing.com, a really big release on our radar is the Producer Price Index, or PPI. Now, this is a super important measure of inflation, but at the wholesale level. And you can bet that investors are going to be watching this report like hawks for any clues about what the Federal Reserve might do next with interest rates. A surprise here, either way, could definitely move the markets in a big way. And all of this leaves us with a final thought. We have this absolutely fascinating tug-of-war playing out. On one side, you've got institutional fear. On the other, pure retail bullishness. It's a classic battle, right? Experience versus enthusiasm. The fear of a bubble versus the fear of missing out. FOMO. The next chapter in this AI story? Well, it is far from written. This video is automatically generated by NotebookLM, an AI-powered tool. The reference sources used in this summary are listed in the video description. As this content is AI-generated, there may be errors in proper names, pronunciation, or unnatural speech. This video does not provide investment or trading advice. Please make investment decisions at your own discretion. Thanks for watching. Don't forget to like and subscribe.